Welcome to GP Bullhound's Tech Thoughts. Today is the 24th of September, and we are here with Inge, Johan, and Nejla for our weekly market roundup. Today, they will talk about Adobe and Salesforce, give a gaming update, and discuss end-of-year worries. Over to them.
Good morning. In the last few weeks, we've been talking about the negative sentiment in the marketplace, and that was really further pushed into more negative, where the Evergrade problems came up again. They have been in trouble for a while, but it was now highlighted again as they are struggling to pay off their debt. Going forward now, okay, what will happen from now? I think in the short run, in the next 2-3 weeks, we'll continue to have a lot of volatility. There will be a lot of rumors about Evergrade and what the stand China will have on how to fix the problem. And I think that will create quite a lot of volatility. And on top of that, we are really seeing investors worried about what's going to happen into Christmas. And I'll get back to that later in the program. Over to you, Johan, about Adobe and Salesforce, which reported this week.
Yeah, this week Salesforce had their yearly Dreamforce conference, and product-wise, they talked a lot about the Slack first mode. So now when they have acquired Slack, a lot of the tasks that you are doing in Salesforce, you can do from Slack. So much nicer UI and UX there. Financial-wise, they also increased guidance for next year and the year after that. It was more than the market expected, and the share was up 7%. Also interesting to mention the operating margin that they increased estimates on. So 18.5% next year and 20% the year after that. However, we will talk about Adobe shortly, which will kind of set the color on that operating margin, even if it's for Salesforce is good since they're investing a lot in product integrations with the new M&As, etc. Inge, any comments on Salesforce?
I just love when companies are starting to be more focused on margins at the same time as they are growing and really more diligent with the margin. And I think Salesforce will benefit highly of this. And you already saw I was a 7% move yesterday. So I think it's absolutely the right strategy, and we really like the stock.
And Adobe reported this week 22% increase in revenue, better than the market expected. However, the beat wasn't that large compared to last quarter. So the share slipped around 3-4% in after trading. Operating margin always really strong on Adobe. You can really see them leveraging the SaaS model. So in this quarter, 46% non-GAAP and 37% GAAP operating margin. And the difference between here is mainly stock-based compensation. But going back to Salesforce, they having a margin of 5% GAAP compared to the 37 of Adobe. So clearly you can see a really high margin from Adobe. Also, when they're talking forward, they're mentioning e-commerce as a growth pillar. They have a lot of really nice partnerships now lately with PayPal, and they're really trying to build an e-commerce platform for others to use to be almost Amazon-like, to also have the integrations with other marketplaces and shipping agents like FedEx. And for the next segment, we're going to the gaming world and Nejla.
Thank you, Johan. Okay, so looking at the gaming industry, I would say that we're still in the cold, driven by the year-on-year comps due to many delays that we've seen on the market the past months, and of course, COVID-19 effects. We still have some delays. However, new releases are still approaching. We have Halo Infinite, FIFA, Far Cry 6, Battlefield, etc. coming up. Furthermore, Activision Blizzard have had an exciting week of new releases as Call of Duty Vanguard's beta version was released. The new game arrives officially on November 5th. Another big release was, of course, Diablo 2. Despite the big releases, Activision Blizzard's shares still decreased after reported that the Securities and Exchange Commission is investigating Activision Blizzard over how the the video game publisher dealt with allegations of sexual misconduct and workplace discrimination. So that's something we're definitely are going to keep tracking.
And as you probably know, Activision is one of the stocks we really like. So for us, that's really something to keep tracking, as Nejla said. And it's not good news if they haven't handled it in the way they should have done, in a proper way. But it now sounds like they are doing a lot of things to address it. A little bit late maybe, but they are definitely addressing it. Going back to market then, and looking at Q4, there's a lot of worries in the marketplace, and I would like to highlight two conference call or two results this week, which really highlights those. FedEx stating that the e-commerce volumes are coming down due to the fact that people are returning to work and going out. And secondly, Accenture really highlighting how far the companies now are driving the digitalization of their companies. So really positive news on Accenture. And that really paints the picture of what's going on. You had profit warnings on subscriptions products like Disney, Altice yesterday, Comcast. So people are struggling with engagements after tough comps year over year. And then you have indication of weak smartphone market in China. You have TV displays falling in price. And you're also worried about what type of inventory you will have for Christmas sales, given the bottlenecks everywhere. And that could even spill over to marketplaces, because why would you do a lot of marketing if you don't have product to sell? So with that said, on the positive side, you have software, which definitely sounds like it's almost accelerating, although we have gone through COVID. But companies now are really, so to say, thinking about the future and really thinking about having a new type of way of working, firstly with digitalization and cloud, but also that you would be able to work from home and at work more than you ever done before after COVID. So that's really positive news on the software side, and we're seeing, and it's definitely heard in the Accenture conference call. One thing I would like finally to highlight in the FedEx call is really the struggle to get employees. I had breakfast yesterday with I think around 15 CEOs of IT companies, and really what comes out from that breakfast is that they are struggling to get employees, and employees at the right price. You definitely see inflation on salaries. So that's all for this week. Thank you very much.
See you next week.